to talk about, and let's welcome on board Ed Yardeni, President and Chief Investment Strategist at Yardeni Research. Ed, hi, morning, and thanks for your time. First up, give us a sense of your take on everything that's happening geopolitically and the equity move that we're seeing globally on the back of this.
Yeah, well, it was actually very fascinating to watch the reaction in the financial markets to what happened in Venezuela over the weekend. Gold reacted as one would expect. A safe haven rush into gold led to a big increase in the price of gold today, and it continues to be on a solid upward bullish trend. The surprise to some extent was oil. The oil price really didn't do much. It didn't go down. It went up a little bit. Energy stocks, particularly the major U.S. energy stocks, did very well because presumably they will have an opportunity to do more of their business in Venezuela and developing that vast oil reserve. But the overall market certainly did not have, stock market did not have a safe haven or risk off characteristic to it at all. The energy stocks did well. So did the financials and the industrials. And that just suggests that investors are pretty calm here about the situation in Venezuela. They don't think that there are going to be any major geopolitical repercussions, which may be a little bit naive, because it'll be interesting to see now that the United States has declared that the Monroe Doctrine is back, that we now are declaring that the Western Hemisphere is our sphere of influence. Well, what's to keep the Chinese from basically saying, well, if that's the case, then clearly we need to move on Taiwan, and what's to say, keep Putin from saying, well, you know what, yeah, I don't really want to resolve this war. I want all of Ukraine.
Ed, if you can also give us your assessment of how do you see commodities going from here on, because the reaction that we saw to Venezuelan crisis was very muted from a commodities point of view.
Yeah.
And the equities market are almost as if they're shrugging off the entire thing, except for some of the defense and the defense stocks, or for that matter IT stocks running up today.
Yeah, it's a good question, good observation. I mean, commodity prices have a lot of the basic metals, the precious metals have had a very strong run in late 2025. Some have started much earlier in 25, like the precious metals, but copper, nickel, tin, those had strong runs at the end of last year. And I think the market is just trying to assess where we go from here. It does look like the global economy has been remarkably resilient to the shock of Trump tariffs. Trump tariffs have turned out to be much less alarming for the global economy, and the global economy and the U.S. economy have both proven to be very resilient. And I think commodity prices, the basic materials are there. The precious metals are a combination. I mean, silver, platinum, palladium, they do have industrial uses. Gold, not so much. So it's sort of a combination of precious metals being used as a safe haven risk-off asset. Look is actually pretty good, and that should favor other commodities as well.
Ed, hi, morning. This is Harsha. How are you seeing the oil price move? At the moment, of course, no impact. But give us your sense of where oil and crude moves, maybe over the short term and the medium term, in your opinion.
I'm glad you asked me that, because that's important. Yes. Yeah, very, very important. And there seems to be a glut of oil. I think that on the demand side, there's kind of a flattish trend in global demand. And I think some of that is because the Chinese are all driving electric vehicles, and they power it up with electricity, and electricity there isn't dependent totally on crude oil. They also use coal and solar and so on. So the demand side looks pretty flat, even if the global economy does well. On the other hand, the OPEC is continuing to produce at their current level, and we may get some Venezuelan oil, though it's very thick oil, so it's going to take a while to kind of build infrastructure for it. But meanwhile, the supply is outpacing the demand. And so I will not be surprised if we have a significant sell-off in the price of oil, maybe from $60 for Brent down to $50 for Brent within the next three to 6 months. So I don't view today's action as particularly significant.
Okay. And Ed, talk to us about the scope with regard to US and global markets. US markets at least nearing or at all-time highs.
Yes.
What's the scope in 2026 going forward? Just a 25 bips rate cut is what is currently being penciled in. Do you expect rate cuts to be accelerated, faster? Is there upside possibilities to rate cuts? And therefore, how should one view the US market? Because it is the largest market and will have an impact on global markets
Sure.
as well.
Well, I think we have to factor in that it's widely recognized that because of the tax bill that was passed last July and it was retroactive to the beginning of 2025, the result of that is that during the tax reporting season, refunds are going to be much larger than usual. And that's going to be very stimulative for consumer spending. It's also going to mean that the government's going to have to raise more money. In other words, the deficit numbers will look worse in coming months. And I think in that kind of environment, there's no reason for the Fed to lower interest rates. The risk is that they get the bond vigilantes mad simply by having too much stimulus, both on the fiscal and monetary side. So I think the surprise is that the Fed will not be lowering interest rates at all, at least during the first half of the year when all this fiscal stimulus is coming in. I think on a global basis, emerging markets emerged last year. They had very good performance. They beat the U.S., and that may continue to be the case this year. It's already starting out in the couple of days of trading that we've had. The emerging markets are outperforming. India consolidated last year after a huge run-up, and I think India will perform well this year as it did prior to last year.
Okay, Ed, appreciate you joining us and thanks for that view. Once again, thank you so much for your time today.
Thank you.
Thanks so much. Okay, viewers, let's move away